great trends unfold. Livermore knew this fear, but he had conquered it. His courage was not the reckless courage of the gambler, but the cold, calculated courage of the professional. It was a courage born not of a blind hunch, but of a deep and abiding faith in his own proven methodology. He stated, "Timid people don't like to buy a stock at a new high record. But I had the history of such movements to guide me." He knew from his years of study that a decisive breakout into new high ground was not an end, but a beginning. It was not a sign of risk, but a sign of confirmed, undeniable strength. He had the courage to buy high, knowing that the stock was destined to go much, much higher. This requires a complete and total re-engineering of the speculator's mindset. He must learn to equate a new high not with danger, but with opportunity. He must understand that the very act of breaking through a great wall of resistance is a testament to the immense power of the underlying buying force. His job is not to question that force, but to align himself with it. To wait for a pullback, for a cheaper price, is often to miss the move entirely. For the strongest stocks in the strongest trends often have the shallowest and most fleeting of reactions. The great story of Old Turkey, the wise trader Mr. Partridge from Reminiscences, is the ultimate illustration of this professional mindset. While the younger, more fearful traders were constantly snatching small profits, terrified that the bull market would end, the old man simply held his position. His reason was profound in its simplicity. Well, you know this is a bull market.
This is crazy. This morning, I need to wait right here, 5.
Fluctuation. He was trading the great
105 right here.
was not focused on
I buy a lot down here, a lot
the
down
great
here.
underlying line of least resistance. He had the courage.
See, I buy a lot down here.
Look,
Look,
it is only possible.
buy.
Conquered his fear of
Look
life.
all the way, buy right here.
Consider the opposite and equally difficult
When they curl back up right here, I sell some here. 1,000 share, another 500 share here, 500 share, all the way up here.
Even more powerful.
Crazy, look all the way here.
Hope. The amateur who is almost always a congenital bull.
This one resisted right here, 140. Break 140, go to all the way 150, start to curl back.
He sees a bargain.
Right here, see?
The glorious high prices of the past and believes they are certain to return.
Look here, daily chart.
He see the break of support as a sign of profound, confirmed weakness. He sees it as a
Right here, see that? See daily chart? Look at here.
Livermore had utterly and completely purged this hopeful instinct from his speculative being.
Daily chart, you see right here,
Loyalty to the bull side of the market.
140.
He wrote with the force of a personal creed.
See, hit 140, it hold right there, and then break it
Or
out.
vice versa. My one
See right here?
prejudice is against being wrong. To be
140, look, 140 stuck right there. How many times? 1, 2, 3, 4, almost an hour, then boom, one breakout right there.
And to remain bullish was not an act of optimism. It was an act of intellectual.
Technical work, guy.
This is where the speculator must find.
You know how to read technical, it's working.
But the great orchestrated chorus of misinformation that so often accompanies a major market turn. At the very moment that insiders are liquidating their holdings, the public will be flooded with bullish explanations for the weakness. They will be told that the decline is merely a bear raid, a temporary manipulative move designed to shake them out of their stock. They will hear from unnamed directors that the company's business has never been better and that a recovery is imminent. Livermore knew this game perfectly. He knew that these stories were a smokescreen, a form of psychological warfare designed to create a market for the insiders to sell into. The professional speculator must learn to be deaf to these siren songs. He must trust one voice and one voice only, the clear, cold, and objective voice of the ticker tape. The break of a great support level is a fact. The bullish explanation is an opinion and very often a self-serving lie. The professional acts on the facts, not the opinion. To master Livermore's strategy for support and resistance, then,
Right, and here, look at this morning right here,
to
guy.
achieve a state of profound
Yes,
dispassion.
yesterday
It is to have the
Yesterday is more plus. Let me show you. Look at daily chart right here, guys. You
It
see?
is to have the courage
The
to
daily
write
chart, this one called the dodgy.
or to sell weakness.
Come all the way down to
That
520.
level is decisively
It's dodgy. And then look at it.
and it is to have the
I let you guys know all the time on this
discipline
one.
to ride it with intelligent patience, and to ignore the constant distracting noise of your own hopes, your own fears, and the opinions of the crowd. This is the final and greatest secret.
Okay, this look like dodgy, right? That's the one you come in right there. And look at the hour gap all the way to $8. Right? Here resistance is stuck right there, 750 all day. Okay, when it breaks down, you need to get out. When it breaks here, you can buy back right there, 750.
And also, I would like to
Right here.
kindly to hit the like button, subscribe to the channel if you haven't done that already. And again, I'll see you guys out there. Thank you.
That is the man who
Right.
triumphed.
Look at look at 750. Look at that guy. See, I draw the line right here. Okay, this morning.
To witness the epic market campaigns where these very sins were committed and ultimately conquered, the essential chronicle remains Edwin Lefebvre's 1923 masterpiece, Reminiscences of a Stock Operator. This is not merely a book, it is a deep psychological portrait of a master speculator at work, a narrative that gives life.
Look right here, this morning.
One of these timeless rules. For those committed to this study,
Right now, bear plus, guys. Right now, bear plus.
Detailed chapter-by-chapter analysis by Max Davidson, an interpretation specifically designed to translate this century-old.
Right, this morning, look at here. This morning,
Provided in the description below.
sale is 760, 755 all the way up here, right here. This is a classic. Need to really know how to read the chart and control your emotional. Right here, you see a line? This line right here, and this line. Sell it right here. See, before the market open, right here, I sell here. What time? 9:14. 9:14, 9:20 before the market open. The market open right here. I sell all of them. Look, right there. 10:13. Get out all small size. This one. 720 right here, all, and keep selling. 703. This one small size, only 2 sale left. This couple hundred sale right here, up here. Looks right there, guys. Sell here. I don't trust it. I don't trust it, guys. That's all. That's all, guy. That's all, that's all. Look here, see? That's all you need to do. The hold right here, very good. If market open up, I hold on. And when it break out, get out. Just symbol like that. Not complicated. Good trade, guys, very good trade. This one here, just small size. Get in, 5, 5, 5, get out right here. A lot 4 cents only. If you're wrong, get out. Nothing complicated. If you're wrong, you get out, that's all. See the ball plus? Let's try 10 minutes, you see ball plus very clear. See right here, 10 minutes. Easy to see. Easy to see right here. Too many resistance. People buy right here. People buy right here. People right here. You need to get out right here, guys. That's it.
TCRS.
Good trade. If there's one right here, you go all the way back here. Everything technical, guy. Support right here, 660. Need to hold. If not, be careful. This one can go all the way 660 and maybe coming back up. I don't know. I just know how to read the chart. I need how to read the chart only. This one done right here, back all the way here, 120. This morning I jump in right here. I jump in here, I sell right here. And then pull all the way back, I buy a lot down here. Buy bottom. And then you need to wait right here, 105 right there. Many times, 105, 105, cannot break down, and then volume pick up right here. That's a buy signal right here. This is a buy signal right here, guys. Right here. That's an A plus setup right there. Crazy, huh? What are you moving? VSA. This guy crazy. VSA guy. Keep going down, down, down. Look at that. Keep going down, down, down. No, this one. It can. VSA. Look at this one. Hold it down, down, down. Right now, hold it up, up, up by the deep right there. Crazy, crazy, crazy guy. Coming down, you can buy. Coming up, you can buy. Let's check out open here. Open breakout. This is 9 ball flat right here. Very 9 ball flat. Don't touch it yet. Let it pull back and see. Wait and see, guys. This one right here, wait and see right here. I love to see wait and see setup. Wait and see setup, guys. Working good. No short, no squeeze. Because a last short. No short, no squeeze. No short, no squeeze, guys. Perfect. Right here too. No short, no squeeze.
CYBM. CYBM.
No short, no squeeze, baby.
CYBM. CSIP. ATOS.
DJT moving.
In the unforgiving business of speculation, there is one skill that stands above all others. A discipline so critical that its absence guarantees certain and eventual ruin. It is not the art of making a profit, but the far more difficult and essential art of taking a loss. The speculator, his mind clouded by the treacherous whispers of hope, will hold on to a losing position, praying for a miraculous reversal, while his capital, the very lifeblood of his career, bleeds away to nothing. The professional, however, knows that a loss is not a negotiation. It is a verdict, delivered by the infallible judge of the ticker tape, and it must be accepted immediately and without appeal. Jesse Livermore, a man who paid for his education with millions of dollars in losses, understood this truth more profoundly than any man who has ever played the game. He did not treat the act of cutting a loss as a matter of vague feeling or emotional impulse. He treated it as a science, a business necessity governed by a set of clear, mechanical, and unwavering rules. He had, in effect, a mental checklist, a 4-step examination that provided him with a definitive, unemotional signal to exit a trade the moment it proved him wrong. This was his great defensive strategy, the fortress he built around his capital that allowed him to survive the market's most brutal assault and to return time and again to fight another day. This is that checklist. It is a simple, powerful, and timeless guide to the most important decision any trader will ever make. It is a framework for transforming the agonizing, hope-fueled process of taking a loss into a calm, disciplined, and automatic business procedure. It is the secret to moving from the world of the 90% who lose to the world of the 10% who survive. It is the mechanical signal to exit immediately. Before we continue, please subscribe and leave a quick comment, even one word. This small action helps the algorithm show this video to more people and tells me these deep dives are worth making. For those who are committed to this journey of knowledge, who return to these lessons to sharpen their minds after the inevitable setbacks of the market, your support is the fuel that keeps this channel going. The first and most immediate step on the checklist is a principle that formed the very foundation of Livermore's timing. Step 1, the rule of immediate profit. This was his initial and most sensitive line of defense. When he entered a trade at what he had identified as a critical, pivotal point, he did not expect to wait for a profit. He demanded it. An immediate profit was the market's own, instant confirmation that his analysis and his timing had been correct. He stated it as a core belief. Experience has proved to me that the real money made in speculating has been in commitments in a stock or commodity, showing a profit right from the start. If, however, a trade did not show a profit almost immediately, if it stagnated, or worse, if it showed a loss, it was an equally clear and immediate signal. It was the market telling him in no uncertain terms that his timing was flawed. He was wrong, at least for that moment. The amateur in this situation is filled with hope. He tells himself it is just a temporary fluctuation. Livermore, in contrast, was filled with a cold, rational, and immediate need for action. He would not wait. He would not hope. He would exit the trade, taking the first small loss without a second thought. The first loss is the best loss, he insisted.
Okay, this one AFC similar to Intel.
On the wrong side of the market's immediate
See Intel right here.
This single simple rule prevented
Same thing, look at here, Intel.
ever
Pull
having
back
to grow into a catastrophic
and then break out.
disaster. It was his ultimate defense against his own capacity.
Okay, pull back right here. Gap up, pull back, and start to curve back up. Right here, stuck right here, and then break it out. Same in the LAC. Look at LAC, guys. You see the chart similar.
From a completely different,
Right here, look.
angle. While Livermore was the supreme pragmatist.
Pull back here, when it break here 750, go higher. Okay.
Theorist. A man who believed that market movements were governed by a precise
750 guy.
cosmic
If this one breaks 750, go higher.
He used geometry, astrology, and ancient mathematics to forecast the exact dates of major market turns. If you wish to
Look at
explore
2
this
year.
fascinating and complex world,
Look, this one.
understand that
$8. Look at that guy.
were the market's secret code.
See? $8.
We invite you to subscribe to our new channel, William Gann Trading Insights.
$8 guy.
In the description below. Having entered a trade that was immediately profitable, the speculator now had to remain vigilant for the first signs of danger. This brings us to the second step of the checklist.
Look at A, still so cheap.
Warned of a sudden and unexpected change in the market.
If come back down here 6 something, buy more.
The abnormal reaction signal.
$8 guy, $8.
Livermore knew that every healthy trend is punctuated by natural reactions. Small, orderly pullbacks on lighter volume that are a normal part of any sustained advance. He was not afraid of these. He had the patience to sit through them. But he was, he said, very fearful of abnormal movements. What was an abnormal reaction? It was a sudden, violent, and unexpected break in a stock that had been, until that moment, acting perfectly.
Right here, 8.
He described it with precision. A stock might have a strong advance of 6 or 7 points, but then in the last hour of the day, all of a sudden it has an abnormal break of 7 or 8 points. This was not a normal, healthy pullback. This was a danger signal of the highest order. He wrote with the force of an unbreakable law. When something happens abnormally stock market-wise, it is flashing you a danger signal which must not be ignored. The professional speculator does not wait for a reason. He does not ask for an explanation. The tape's sudden, violent action is all the explanation he requires. A move of this character is a clear sign that something has changed, that a powerful, unseen selling force has entered the market. Livermore would not argue with this signal. He would not hope it was a temporary fluke. He would act on it.
This one long time Canadian solar.
Another great speculator.
This long time ago can run. This one run before kind of crazy.
I don't argue with it. I get out. A few days later, if everything looks all right, I can always get back in again. This is the essence of professional risk management. To ignore such a clear and violent warning is to choose hope over the market's own factual evidence. A choice that almost always leads to a costly and regrettable loss. This second step, then, was his early warning system. His protection against the sudden and unforeseen storms that can wreck even the most promising of campaigns. Having established
Right here, wait and see, right?
defense in the speculator's checklist,
Ball
the
plot.
immediate exit from a trade
Ball
that
plot.
fails to show a profit, and the swift retreat in the face of
Ball
an
plot to see what's
abnormal
going on.
reaction. We now advance into the realm of pure mechanical discipline. The first two rules are reactive, signals that demand an instant response to the market's immediate behavior. The
Up
next
8%.
step, however, are
Nutri.
proactive.
This one keep moving, guys. Look at that.
Predetermined, mathematically precise lines in
It's
the
good to
sand,
watch right there.
unshakable laws that a
Ball
speculator
blast.
set for himself before
Might
they
go fall back.
to be executed without thought or hesitation. These are the rules that transform risk.
3 million share, not many volume.
Cold, hard science. This brings us
No
to
volume,
the
guys, no
most
volume.
strategic step of the checklist. Step 3, the break of the pivotal point. This is Livermore's ultimate non-negotiable signal that a great primary trend has officially and irrevocably reversed. It is
All right, that's
the
it.
return.
Bye-bye,
The
guys.
market's
Bye.
informal declaration that the old regime is dead and a new one has taken its place.